The forgotten farmer who predicted panics. Samuel Benner's story. Today, when people want to understand the markets, they turn to Wall Street analysts, central banks, and endless streams of data. But in the 1800s, long before algorithms and supercomputers, an Ohio farmer dared to do something extraordinary. His name was Samuel Benner, and from the quiet of his fields, he tried to chart the future of financial booms and busts. The world of Samuel Benner. Samuel Benner was born in 1832 in Knox County, Ohio. He grew up in a nation recovering from turmoil. The Civil War had ended, and America was racing forward. Railroads carved across the countryside, factories churned with steel and iron, and cities swelled with opportunity. But beneath the promise of progress lay instability. The 19th century was scarred by financial panics. 1819, 1,837, 1,857, 1,873. Each collapse toppled banks, ruined farmers, and shattered lives. Benner knew this pain firsthand. He had invested his fortune in an iron smelting business. When the panic of 1,873 struck, the bottom fell out of the iron market. Prices collapsed, demand evaporated, and his business was destroyed. Ruined, he retreated to farming. But instead of surrendering to despair, he began asking questions. Were these collapses truly random? Or was there a pattern, something hidden beneath the chaos? The making of Benner's Prophecies. From his Ohio farm, Benner began studying markets like other men studied the weather. He examined the prices of pig iron, wheat, and corn. He charted years of boom and years of decline. Slowly, he saw rhythms emerging. In 1875, he published a book with a title as bold as his ambition, Benner's Prophecies of Future Ups and Downs in Prices. It was unlike anything produced by economists of his time. The book contained hand-drawn charts, cycles of prosperity and depression mapped across decades. Benner claimed that pig iron followed an 11-year cycle. Agriculture, he argued, endured a longer rhythm, a 27-year cycle of depression and recovery. And he dared to predict specific years of panic, years when farmers should expect ruin, and years when prosperity would return. It was a remarkable work, created not by a banker, nor a professor, but by a farmer with nothing more than keen observation and stubborn resolve. Panic, boom, and bust. The late 1800s offered plenty of tests for Benner's theories. The panic of 1,873 had destroyed him, but others soon followed. In 1884, another financial shock struck. In 1893, a catastrophic depression spread across America. Railroads collapsed. Banks shuttered. Unemployment soared. When compared to Benner's charts, the parallels were unsettling. In some cases, his predictions of downturns aligned closely with actual events. In others, he was less precise. But his basic claim that markets moved in cycles of boom and collapse proved hard to dismiss. For ordinary Americans, the pain was real. Farmers saw their land auctioned away. Railroads, once symbols of progress, fell into bankruptcy. On Wall Street, speculation ruined fortunes overnight. Against this backdrop, Benner's calm, handwritten charts seemed almost prophetic, a reminder that these panics were not accidents, but part of a larger rhythm, the legacy of a forgotten prophet. Despite the boldness of his work, Samuel Benner never became famous. Economists largely dismissed him as unscientific, a curiosity at best. His ideas circulated among farmers, who often trusted his advice more than the words of bankers. But in universities and financial circles, his name faded into obscurity. And yet, the irony is striking. Later theorists like Nikolai Kondratiev, with his long economic waves, or Joseph Schumpeter, with his cycle theories, echoed ideas that Benner had sketched decades earlier. He lived out his life in Ohio, refining his charts, convinced that history's rhythm could be measured. A man outside the system, ignored by experts, but quietly remembered by those who saw truth in his pages. Echoes in today's world. The question is, was Benner right? Look to the 20th century. The Great Depression of 1929, the oil shocks of the 1970 seconds, the dot-com crash in 2000, the housing collapse of 2008, the COVID crash of 2020. The details change technology, globalization, speculation in new forms, but the cycle remains familiar. A period of optimism, soaring markets, easy credit, followed by collapse, panic, despair. Even today, in an era of artificial intelligence, complex algorithms, and endless data, analysts still search for patterns. They still ask whether markets move like tides, inevitable and repeating. And again, we are reminded of the old truth. History doesn't repeat itself, but it rhymes. Closing reflection. Samuel Benner was no Wall Street titan, no trained economist. He was a farmer who had seen his world collapse and refused to believe it was random. With pencil and paper, he tried to read the heartbeat of the market. His book, now a relic, is more than a curiosity. It is a warning that prosperity always carries within it the seeds of collapse, that greed always gives way to fear, and that no matter how advanced we become, the cycle endures. Perhaps the real question is not whether Samuel Benner was right, but whether we have learned anything at all.